Jim, there's just so many themes going on here. So let me ask you what I just alluded to on the view forward for Congress. How do you invest forward to 2022?
Well, that's going to be tough, especially if you think that Washington is going to be as important as everybody thinks, because there's no clarity yet coming out of Washington. But if you put that aside, you are left with a couple of troubling issues that are out there. It's going to be no fiscal stimulus. That should slow the economy. Remember the virus? That used to be important. Yesterday was another record day for cases in Europe and almost in the United States, one of the two highest days that we've ever had. That portends an economy that is going to continue to struggle as we move forward from here. And that portends that without any kind of clarity from Congress, support for the economy is not going to come. It might come down to the Federal Reserve that meets today and tomorrow.
So, Jim, I'm looking right now at 10-year Treasury yields, and John Farrow's done a great job of talking about the swing. You've seen yields come in the most at one point since April. Is this a trend to bet on? Basically, the consensus was wrong heading into this election, that you're actually going to see lower yields ahead?
I think over the short term, you're going to see a correction in yields, and they're going to move lower. But I'm still of the opinion that the March 9th low of 33 basis points in the 10-year was the end of the bull market for bonds. And what we're going to have is a corrective phase now. And that if you want to look out 6 or 9 months, I know it's hard to look out past 6 or 9 hours, you're probably going to have much higher yields into the summer of 2021 on the back of a potential move higher in inflation. Not a big move higher in inflation, but I still think that's coming.